Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys. Good morning. Welcome back to another live stream. I am, you're kind of catching me set up for a trade that I'm looking to take. Actually, short side on an index, which is very rare for me. But I'm currently looking at a potential short setup on the Nikkei, which is the Japanese stock market. After this big rally up since Friday's close, I'm looking at a possible short setup. I was doing some risk management stuff on my separate monitor. I'm looking to potentially short here. I'm going to wait until the New York Open in about 7 minutes, and I think I'm going to take this short. And my idea here is something like this. I think I'm going to take a short right around this current levels. I want to risk about 2% from here to the upside. Not 2% of my account, 2% distance. But I kind of like the idea of potentially trying to take a stab on the short side here. Maybe a second attempt would be around this area. So keeping an eye on that, but I'm going to watch this one out of the gate today because I do think I'm going to probably take that short. I'll go ahead and just really quick highlight why that is. If I take a look at the Edge Finder, we do have a Nikkei bearish reading coming in at -7, which is a pretty meaningful bearish reading. In fact, I want to see, do we have this on the stock scanners? Let me look. Let's see what we got. Also, by the way, we got 315 people here watching. We're live streaming on Twitter. We're live streaming on YouTube to 2 different YouTube channels and 2 different Twitters. So we are all over the place. Wherever you are watching right now, do me a big favor. Hit the thumbs up button on the stream. I appreciate your support. Appreciate you being here with me. So again, I mentioned I'm looking at a possible short this morning on the Nikkei 225, which is the Japanese stock market. And I'm curious to see how this one shapes up here into the open. Also, what is up with seasonality? Why is it saying positive? Let me look. Wow, seasonality is actually positive for the month of September for the Nikkei. Interesting. But I think overall, when I take a look at the rough summary view, Nikkei's got us a nice overall bearish score. I'm not really interested in shorting the US indices at this time, but with the Nikkei poking up into -7 territory, I don't hate that as a possible short setup. Trend to the downside, take a look at the price action here. Again, my idea is a possible short here after this bounce over the weekend. Weekend started out here Monday morning for Asian session was strong. But yeah, I'm looking for a possible short with a stop loss just above here. And if I get stopped out on this first attempt, my second attempt, I'm thinking right now would be around 37,109 on the Nikkei. So looking at that, Kyle says, what's the ticker for the Nikkei? I'm going to be trading probably EWJ, which is a iShares Japan Index Fund. So I think I'll probably take a small short on that this morning. Emphasis on small. I'm not looking to like get super bearish or short side, but there's something here that I like. You know, I think we've broken this upward structure, this rebound trade on the Nikkei, kind of fizzled out. And I was looking at this and I was like, this just looks a little bit cautious. You had jobs data that came out last week, and was the jobs data horrendous last week? It was not good. It was definitely, it leaned bad. It wasn't absolutely terrible, but stocks are priced very, very expensive in the US. They're priced for a soft landing, and the chances of a soft landing, I would argue, were challenged last week. I still think a soft landing is the base case. I think it's the most likely scenario, but we've got to address that. Okay, there was some rough jobs data last week, and I don't hate this idea of possibly looking to get short side on the Japanese index, which sold off very, very hard last time around when we had some rough US economic data. So I'm going to watch it close here. We've got just about 3 minutes before the New York opens. I'm waiting for the New York Open because I trade on a stock brokerage. So when I take positions, I usually am doing so on an ETF. I don't trade futures. I don't have anything against futures. I've just always traded on a stock brokerage. It's what I'm comfortable with, and that's what I like. It's not the most practical always because ETFs limit your period of time that you could trade, but I really trade the New York session anyways, so it's not a huge inconvenience for me. I'm more of a swing trader, so this is a 4-hour chart setup. If you get, let me tell you where I'm wrong here. If we get a breakthrough this high here, if we just kind of completely erase Friday's sell-off, then I'm probably just going to call it quits on the trade. Maybe I'll take a second attempt here. I would have to take a look at what the price action and what fundamental kind of score I'm getting on the Edge Finder really is looking like at that time. If you get a retest of this area, I may take a second short attempt if the first one doesn't work out. So we'll see. It's kind of a tight stop loss. Just about 2 minutes to go here. I've got it punched in on my other screen here. I'm just waiting for the market to open. And then I'm going to look to set up that trade. So just going to watch this for a minute. Well, actually, let me just come right back to it. S&P 500 is moving higher. NASDAQ moving higher here, bouncing back a little bit, making a little bit of ground from the big sell-off that we saw on Friday. I'm still in the long position on gold. Not a lot has changed here. Gold just chopping away, not really making any decisive movement there. Dollar index slightly higher here this morning. Seems to have, at least for now, found a low around the 100.54 level. This week, we've got the consumer price index and the producer price index numbers coming out, which they will cause some volatility, either to the upside or downside. We don't know. We'll have to see what the data comes out. But there is that possibility that for the bears out there, if you get something like a hot CPI print, that could really spook the markets, because then you do have slowing in the economy. You don't want to see inflation picking up into a slowing economy, right? Many people are looking for some reassurance this week that inflation is coming down alongside of the slowing economy, which would give the Fed leeway to start cutting rates and pick the economy back up. So I want to reiterate, I'm not incredibly bearish on the situation. I don't think it's the end of the world, but I do like the risk to reward here on a possible short on the Nikkei, and that's what I'm watching here this morning. So I'm going to go ahead and just watch this open for a second. I'm going to look to get short here once the market opens. And the nice thing about being a swing trader is it's not speedy business. I don't need to be like immediately, aggressive on this. Okay, so I am just about in here. Okay, I just took it on my demo tracking account as well. So where did I say? So looking at 36,709 as my stop. Let me see this. Okay, so 36,711, that's close enough. All right. And I'm going to go ahead and going to copy these details over into the signals room. So give me just a moment here, guys. If you're in the Discord, I'm going to be putting this trade in here for you, and I'll keep you updated on what I end up doing with it. My first short position in a couple months. I've not really traded on the short side of indices for several months, which has been the right call, but we'll see. Okay, so EWJ. So just to reiterate, 1.75% distance. So we're going to go ahead and go take a look at EWJ. 1.75 distance puts me right here. So what we want to do is create a new order with a buy stop here at that level that I just mentioned. That looks okay. Good till canceled. And we want to do the full amount of 400. So we want to buy back 400 shares if we get a move up into this area. Okay, we're good on that. So let me just copy those details into EWJ ETF. Entry 69.34. We take a look. EWJ ETF stop is 70.54. So again, kind of a small position for my account, but that is typically how it goes with short side. I don't like to take big, heavy short positions on the market, but this one just set up for me this morning. I liked it. So we'll see. Could be a complete wash, and if it does stop out, then I'll be back to square one. But I think the risk reward is decent. So let me also share a screenshot of what I'm working with here. Oops. Okay. All right. Nikkei 225, put that in there. All right, let's just go through the analysis really quick. So sharp move lower on Friday following mixed / slightly concerning jobs data. Price bouncing into a resistance zone. Downtrend potentially forming after the lower high on the daily chart. Stop loss is above resistance here. Small sizing in case I'm wrong. All right. Seasonally bearish time of year for indices. Threats to the soft landing could create volatility for indices. All right, so we'll see. There's that. I just put that in the group. So all trades that I take get shared in the Discord, by the way. If you're not already in the Discord, sorry for we just spent like the first 10, 15 minutes of stream setting up that trade. But that is how it goes. You know, in taking positions, sometimes it falls right in stream. And I know it's not always fun to watch me punch in orders, but it is what it is. So I just went short the Nikkei. We'll see. First attempt on the short side. If this does not work out, again, I've got a stop loss in place. So if we do see, this thing just rip through the highs, then I'll just take a small loss in this trade and potentially try again around 37,100. But we'll have to see. I'll have to take a look at it at that time to decide if I would like to take another attempt or not. And my judgment on that is based on my strategy, which incorporates fundamental analysis and simple technicals as well. So again, I'm short the Nikkei. I'm also long gold here, which gold I discussed earlier has just been really boring to watch. If you've been watching gold the last few days, it's like watching paint dry. It's just going sideways. It's not really going anywhere too quickly. It's just kind of going sideways. So we will keep an eye on that. Take a look at some other markets here really quick too. We got the dollar index a little bit higher here this morning. The VIX down about 6.75%. Chinese stock market, rough here this morning. The Nikkei up about 3. You got the Russell up 0.75. You got S&P up 1.2. NASDAQ 1.5, 1.6. And the Dow Jones up about 0.8, 0.9. So, yeah, a little bit of a bounce back for stocks. And it is possible that, depending on how this week goes, you could get stocks all over the place. We take a quick look at the S&P 500 as an example. So the S&P 500 here put in a really bearish week last week. We saw a huge sell-off following with consecutively bearish candles. I do think this is very, very normal, even if we're going to continue bearish, to see some kind of day like this. I mean, it was kind of hindsight here, but it was a little bit due for a bit of a bounce, right? Will that bounce last? We'll see. Is this going to be, big higher low? That will be the signal to watch for the bulls. I think you really confirm that this is a higher low for the bulls if you get a return back to the highs, right? If you start breaking through structures like this, this level of resistance here, it's very possible that we are moving north again. But until that, it's tricky because, if you take a look at the S&P 500, it's very slight, but we did technically put in what looks to be a potential lower high. It's a little bit early to call because you could be looking at this and say, well, in order for you to really know if that's a lower high, you got to see a break structure. Because right now, this could be one big old long-term kind of consolidation for the S&P 500. That would be, appropriate or possible. I know I was listening to Chris Pulver, his Sunday video. He discussed the idea of maybe the S&P 500 here is just going to go back and retest lows. Maybe we're just in a range for a little bit while we wait out the election cycle, while we wait out what the Fed's going to do. It's very possible that you do get some more volatility off the back of the elections. In fact, I wouldn't be surprised if September seasonality continues to see a little bit of volatility. I currently have no long index positions. I'm only slightly short on my Nikkei 225 position that I just shared with you guys on stream here. If we take out those lows, I would not be surprised to see a push down into the 5250 level for the S&P 500. In fact, I would actually like to see that. That would be my preferred scenario because I'm not necessarily bearish on indices as a whole. I did just take a short position on the Nikkei, but I would say that they're just due for a bit more of a pullback. I could be wrong about that, and if I am, then that's why we use stop losses, and that's why you can. The beauty of trading is that you can adapt to, what is showing up in the markets for you. But I'm watching the S&P 500. Another one that's interesting is the NASDAQ. Take a look at this. The NASDAQ a little bit more pronounced in its bearish sell-off last week. Last week was a horrible week for technology stocks. Some of you guys who might have been watching them might have recognized that as well. If you were watching semiconductors, if you were watching the QQQ or the NASDAQ 100 index, my goodness, it was a rough week for tech. And, what I'm looking for here is I do think that a bounce is very appropriate, but I'm curious to see if we're going to kind of recapture some areas. Are the bulls going to start taking back control here and start pushing through? Or is this going to put in another lower high and continue to go lower, right? That's the concern. And I think that either ways, a bounce is sort of appropriate in the short run, even if you are bearish. But I'm very curious once you start getting into, the 4-hour chart levels, as you start seeing this thing bounce up into, where we ran into trouble last week, are you going to get similar reactions? Are we going to see a continued sell here? Or are we going to start recapturing those levels? I think when we take a look at the 4-hour chart, we get better view here of what could be shaping up to be, maybe a reversal. If you get, break through these levels, 19,000, if we start making a move back confidently into 19,000, then I'm definitely not going to be shorting into that because that looks strong, right? But we'll have to see because these sorts of moves can get very violent to the up and downside in a bearish market. We've discussed this on stream many times. If you're a regular, you know that when we're talking about indices, they can be very violent in downtrends to both directions. So what I mean by that is if you're going to get a real kind of corrective move for the months leading up into the election, then this big spike is naturally going to have violent up moves within it, right? So you can see these kind of violent moves to the upside. And it's a very characteristic thing of the indices. You can see when we're moving up, you typically get these kind of chugging upward trends with brief pullbacks. But then when you start moving lower, the interesting thing is you get these violent bounces and then violent sell-offs again. So right now, that's the question this week, is really watching as we get closer to CPI. Is this going to be kind of a rip back rally week, which I would argue would come off of the back of a not threatening soft CPI? Or is there going to be some challenges here? You're going to start to see that consumer price index show signs of inflation not going down anymore. That would be the very bear case for markets right now, would be if inflation were to do something like this. It's not expected. I don't think that's likely to happen, but I'm just saying a scenario in which you get concern in the market. So, yeah. So, yeah, we will see. Yep, I see some people have some thoughts on my Nikkei short. We'll see. I really don't care. You know, if I get stopped out on this, it's a very small risk for me. I'm looking for a possible second attempt up in the 37,100. I know everybody has their opinion on entries. You should look at this. You should do that. I actually think entries are kind of a waste of time to put too much emphasis on. Timing in the market is just very tricky. What matters more to me is the fundamentals. What matters more to me is how I manage the position, if I'm right or if I'm wrong. Entries have never been my forte, and I've still done very well as a trader over time. Like entries, it's not that I'm always wrong. My entries are still decently good. It's just that there's no simple, easy answer to always entering the market right. It's all about just, in my view, risking appropriately, sticking to your plan, and managing the position as you're supposed to, if it moves in your favor or moves against you. All right, so dollar index did shoot off the lows here. Well, I'm very curious to see how this daily chart shapes up for DXY as well. We put in a low here, kind of retested lows here. The question is, this week on CPI, do you get kind of the reversal move here, like the big reversal candle taking out those highs? Tap back into some of these bigger resistance zones? Or on CPI, do you get weakness that could take us through the lows? Definitely a possible scenario to watch this week. That gold entry was immaculate. Kind of, but you got to remember, I didn't enter right here. I wish I did, because it would have been a lot less time waiting. I actually entered over here, which the entry was still very good. So yeah, that's to my point about entries. Like, that was a really good entry, but I don't claim to get those all the time. In fact, it's really rare that I get that kind of entry. So yeah, we will see. Very, very interesting. We'll see how the this morning shapes up. New York session just got started here. Take a look at the 15-minute chart just for a second, just to see what indices are kicking off with. You've got S&P 500 moving higher here. I did sell some puts on NVIDIA on Friday. Let's see how NVIDIA is doing this morning. Very nice. So NVIDIA moving higher. You can't see it because Weeble's integration with TradingView doesn't show options, unfortunately. But I do have a put that I sold around, let's see, what was it? I believe it was a 95 strike price. So basically, if NVIDIA drops down to that point, I have to buy the shares at that price, but I get paid a premium for writing that put. So I sold puts on NVIDIA. I also sold puts on ExxonMobil, which the puts that I sold were at 112. You can see I marked it in the white line here. So I sold puts at 112, collected a premium for that, and that is a month out. So it was pretty good premium, I would say. And if this market goes sideways or up, I won't have to do anything. I'll just collect that, payment. And if the market goes lower, then I'll get to buy some shares of Exxon at a price that I think is a good, starter position. I do have willingness to buy more shares, dollar cost average, into something like Exxon, NVIDIA, etc. That's one of the ways that I diversify my approach in the markets. I don't simply just, long and short indices, commodities, and FX. I also play some options, collect some premium. Even if the market goes sideways, I can make money, which is kind of nice. Speaking of that, Chris Pulver is the master at that stuff. He is the options guy. You guys probably know him from the show. If you're a regular, then you know very well. Chris Pulver is coming on later on the show here. And I should mention, Chris Pulver and I have been discussing, we've got a very special announcement that is going to be coming up in just a little bit when he shows up on the stream. So stay tuned on that. Chris Pulver and I, we've got something fun to announce. With ETFs, you're not paying crazy swaps on gold longs. That's correct, Kyle. I don't pay any swaps, right? I pay an expense ratio. I'll show you what I pay per year. Actually, oh, sorry. I have to go to GLD. Here's my GLD trade. So in terms of what do you pay to, if you're trading a CFD brokerage and you trade gold on the long side, every day that you hold the position, you're paying swaps, right? The cool thing and why I like ETFs and futures is that you don't pay swaps every night. Actually, I don't know how it works in futures. I'm very unfamiliar. With GLD though, look at this. So I pay per year 0.4% of my position size. So if I have $1,000 position, what is that, $4? Right? Or $40? No, it's not $40. 40 is 1%. $4 a year to hold a position. So not bad at all. And I much prefer it that way. So yeah, check back on my little short position here on EWJ and pull up EWJ so we can see the P&L. I'm up $5. Should I close? Oh, $1. So we'll see how that one plays out. Hasn't really moved at all, but we will keep an eye on the indices here today. I'm very, very curious this week, guys, because I don't know what CPI is going to print for us. Is it going to print a big surprise upside, which would be, I would argue, very uncertain for markets? Or is it going to stay in line and continue to cool off, which would be very good for the story? Gives the Fed more room to cut rates and stimulate the economy. Nick suggests a trade for us. I highly recommend that if you are joining a stream just looking to copy trades or follow someone else in their positioning, that you stop trading, because you should not try and copy anyone. You should really make sure that you're trading a strategy that you've tested, fully understand. You understand the risks to a strategy, because if you're just trying to blind copy, you might as well stop trading and just passively invest and move on from trading. Genuinely. I'm not even kidding about that. You're better off. If you're like, this stuff is too hard, I just want to copy someone, then stop trading. Because what's going to happen, I've gone over this 100,000 times on my channel. Long story short, if you're copying someone and you don't know how to trade yourself, you don't know the intricacies of the system, the strategy, right? You don't understand that drawdowns can happen and that drawdowns stink, but they happen to everybody. Even the greatest trader you know has months of time where they're just losing money and they feel like an idiot. Everyone goes through drawdown. So if you don't understand the mechanisms of someone's strategy, you can't just copy your way to success in this stuff. And if you do want to copy your way into success in this stuff, the way to do that is to just long-term invest and don't stare at it. You might not make as much, but you don't have to put all in the work. So again, I'm saying that's a plausible option. If you don't want to do this hard work, then step away from trading and don't put in the work. Go just long-term invest and move on with your life. You should take profit. That Nikkei short can't go broke taking a profit. Yeah, I guess I could take my $9, my $13 of profit and just cash it in. There's people who do that, and I can't say that I think that's a great approach, but there are people who take very small profits and just stack them. And I mean, it's a tricky one though, because there's just going to be times where you enter the market and it goes against you big time. So it's tricky. Yeah, gold is like the most boring chart right now. It is literally just sideways. If you're looking at the 15-minute chart, maybe there's something more. But again, I look primarily at the daily chart for for direction, for entries, I'm using the 4-hour. So this chart just spells trouble trying to like get overly decisive on a direction, because the market itself on the daily chart is just so indecisive. From here, if we take out the lows, I will take my loss. And if we move higher, break out, then I can start working with this position. US 30 looks good for shorts too. I can't go there with you. If I look at the top setups page, I don't have US 30 on my screen as a possible setup. I do have the Nikkei. That's why I took the Nikkei short. And I could be completely dead wrong about that or too early to the idea. And if I am, I will take a small loss. Yields here slightly higher on the day. How's TLT doing? TLT. I was looking at possibly getting long on TLT. Actually, I want to look at the COT data really quick just to see what that's looking like. COT data, pull this up. They sold the Nikkei slightly. They sold Dow. They sold a little bit of gold, copper, the 10-year they sold. Treasury bonds, by the way, that's what that is. Silver, oil, platinum. This is what they sold. They sold commodities heavy. They sold, yeah, wow, they sold every commodity on the indices or on the edge finder. Heavy selling of commodities. What did they buy? They bought the Canadian dollar, the NZD. They bought the yen, the Russell, the pound, the Aussie, SPX, US dollar, NASDAQ, Euro, South African Rand, a little bit of Bitcoin, and a tiny bit of CHF. Now, when you hear me say the words they, what am I talking about? I'm talking about institutional money according to the Commitment of Traders report. Our software pulls all of this data in so that traders can view it in a simple to use format. If you'd like to get access to this, we do offer a paid trial. It's 30 days access, and the trial fee that you pay gets credited towards your final purchase of the tool whenever you're ready to buy it. So if you'd like to try the Edge Finder out for 30 days, what we'll do is we'll drop the link to the trial here. It is a paid trial, just to clarify. I know sometimes people are like, what, paid trial? Yeah, so what we do is we have a couple people on our staff. The tool is a bit... it's a lot of information at once, and we have people who are specialized in helping traders to understand how to fully use the software, can check in on you as you try it out. So we do have, it's a service that we provide as part of the trial. And we reserve that for serious buyers who are interested in trading with software. We used to do fully free trials, and what would happen is you would just get tons of people who would just do the free trial, change their email the next month, do the free trial, do their email. So we had people ripping us off, basically. So what we decided is, okay, if someone's really serious about the trial, then they can pay a small amount of money. Shouldn't be a big deal if they do plan to buy the software in the end anyways. And that way they can, have a real chance to try out the software for 30 days, see if it's right, and then make the decision if they'd like to buy it in the end. So if that's something you're interested in, we just dropped the Edge Finder trial application form, and you can submit your information there, and someone from our team will reach out to you. Okay, guys, we're going to take just a very quick break here. We will be right back in just a moment with Ivan to talk a little bit more about the charts, see what's going on here in his world. We'll be right back just after this. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, we're back with Ivan. Hey, Ivan, how are you?
Hello.
Happy Monday. What are you watching today?
Trying to get an entry on SPX more than anything else.
Show me your thoughts here.
Yes. Well, 54, 5476 probably, like somewhere either that level or that level, somewhere between those. I'll look for a reversal and then lower.
Okay, so big sell-off last week. We're getting the bounce here this morning. You think there might be some downside? What's your reasoning behind the trade there?
Oh, the world's gonna crash.
Oh, okay.
That's my reasoning. No, it's seasonality. It's money flow, and I believe we're gonna price in, or like my deal with it is we are pricing in the election. So at some point we're gonna have to take profit, and it seems to be about now. So I was waiting about last week for the reversal or the lower low. I got that last week, and I need to pull back. So I'm just following the process.
Okay, fair enough. Yeah, and just wanted to bring this up, as you mentioned, that seasonality for S&P 500 is something we've talked about a lot in recent weeks of the month of September. Is historically the worst performing month for the S&P 500 for whatever reason during this part of the year. It is statistically significant that there is usually bearishness in the S&P 500 during this month. That doesn't mean every single September ever is going to be bearish, but so far this year, we've seen a rocky start for September. Perhaps there's some more downside to come here, and I don't hate it. I mean, I took a small short on the Japanese stock market, the Nikkei, this morning. I may be a little bit early to the trade, but we'll see. This was kind of my thought, was similar concept. Last year or last month, we saw the big slide in NFP. Japanese stock market dropped like 28 something crazy percent from peak to trough. I mean, there it is. Yeah, 27, 28%. So if we get any sort of fear resurfacing, the indices could really have a steep drop off. So I don't hate that. So what else are you watching?
I just looked through chat. So I saw somebody buying Nasdaq. Oops, that's also one of my. I haven't got the entry yet, but I'm looking to sell it. Am I having more room for yens? Also, the thing with yens that I really want to go over to next is, I just need to come back to pull back on Nasdaq. So those are my two. Like, I'm about to do something about very soon. But then the dollar yens on the yens, I saw it this morning. I was like, we have a pullback. Great. Let's do a pullback. And then I left, and then I came back, and now everything is erased.
Yeah, the yen crosses have been absolutely crazy. I saw them tank through the lows last week, took out that that kind of level of support that we're holding now. Do you think, Ivan, that we will actually break that big scary drop off Monday morning low, August 5th? Do you think we have the chance to see the Japanese yen strengthen enough to actually get dollar yen to break those lows?
I have two conflicting thoughts in my head at the moment. One is I believe we're going to fall until 23rd. That's like my theory. But then we are at support now.
Yeah.
So I believe we're still going to continue. But also, like, at what level are we at? We are back at, what level are we now? We are back at January 24, maybe August 23rd, as we are kind of like mid 23, beginning of 24. So if we're back down to like 23 level, that would be a bit more crazy.
Yeah. But yeah. we've really broken, and when we take a look at the yen crosses, we've really broken the momentum of this year. And I've discussed this a couple times with you too, Ivan. But for maybe people who are listening in for the first time, Ivan and I discussing this concept with the Japanese yen. It's been just a weak currency for a number of years now, actually. And part of that train has been the high inflation from the United States and other places has led central banks to raising their interest rates. Meanwhile, the Bank of Japan has been steadily dovish during that time, creating a big divergence and creating huge trends in the currency world. But that is changing, has been changing kind of in front of our eyes here recently, with global economies showing some signs of really slowing down and actually looking to reduce their interest rates. We've started to see that globally, which has put some pressure here and made the yen perhaps a little bit more strong, or has made it strong in the recent months, and perhaps has set up a kind of a one big kind of mean reversion moment for the Japanese yen. You can take a look at this on a long-term daily chart level, and you can see we're starting to kind of starting to lose our momentum even on the long-term basis. Take a look at the weekly chart here. I don't know. How far can this thing go down if it wants to, Ivan?
How hot is it at the core of the Earth?
It's pretty hot. I've been there
Yeah.
once. I'm just kidding.
No, I have to say that it's very dependent on, of course, growth and inflation in Japan and the course of it, and it's also dependent on Swiss and how Swiss is moving. So to me, it's more of we can definitely break the lows. Also, there is no question in my mind that that's going to break. Mostly because when the trend starts and the rate of falling we have at the moment, it is definitely possible. Don't check it out. Sorry.
Yeah, I wouldn't even be surprised. I mean, it kind of depends what happens too with the other central banks, but we have the Fed coming up soon with their decision on rates. Some people are saying 50, some people are saying 25 basis point cut. And for the newbies who don't quite know what that means, basically the Fed cutting interest rates makes borrowing money easier. It's an act to try and make the economy or re-accelerate the economy, get things rolling again. And depending on where the economy is at, they may choose to do a bigger reduction or a 50 basis point rate cut, or a smaller reduction in the borrowing cost, 25 basis points. 20 basis points, 0.25%. It's just a fancy jargon finance bro way of saying 0.25% or 25 basis points. Anyways, Ivan, now, here and now, point blank, do you think 25 or 50
25
basis points is more likely? I'll give you my answer after.
25, yeah.
Okay, so Ivan is locking in 25. That's what I was going to say too. So that didn't make it very interesting. I was hoping you'd say 50 so we could kind of argue about it. But no, 25 basis points. When you look at what we've got here, on Friday you had the jobs data come out, and it was not particularly really great or absolutely horrendous. It was leaning not great, but it wasn't, the whole world is falling apart. So I think that kind of locks in the 25 basis points. And that seems to be what the Fed Watch tool is saying. Isn't that right, Ivan? Is that right?
Yeah, I just dropped you to 2 seconds there. But yeah, 73 for 50. So for one rate cut on
yeah. Okay.
next week, yeah.
So expectations are for a 25 basis point cut. That's what that 73% number is indicating. So we'll see if there's any surprises there. But the only thing left, Ivan, between now and then that's really meaningful is the consumer price index. Is there anything that could come out, and the producer price index? Is there anything that could come out with inflation this week that would change this story more? Could it possibly do anything?
This deal isn't sold to anyone. So don't sell the skin before you shoot the bear. Something in that direction. Anyways. Norwegian, English, whatever things.
Yes.
Also, if this thing that is called CPI, Consumer Price Index year-over-year, August comes in at 3, dollar's going to strengthen. 3 or above, which on one side is 2.6 expected, so that's 0.3. So anything more than 0.2 difference from the expectation is going to create a movement. But if it comes at 3, then also that's a reacceleration. And we have been fighting so hard for so long to be below 3. And if we go back up to 3, it's going to turn and twist the entire market upside down, and that's going to be very fun.
Yeah. If you get a surprise up move in inflation,
Yes.
they're expecting a lot of continued progress there. If you get anything surprising there, that makes it rough for markets, because then you're suddenly looking down and you're saying, okay, the market is expecting, they're not, yes, everyone's talking about September's interest rate cuts, but the market is expecting a flush of rate cuts in the coming year. If you get a bottoming out yet again around the 3% mark for inflation, it will really diminish the number of expected rate cuts in the coming 12 months. So if inflation doesn't continue to cool off, that will potentially refocus the attention on inflation again, which could slow the pace of rate cuts, which slowing the pace of rate cuts could mean pain for areas that have been desperately waiting for rate cuts, specifically things like small caps and real estate and technology names, etc. So good stuff there, Ivan. We'll have to see. Maybe we'll get you to come on for CPI this week. I'd like to get your thoughts and watch your facial reactions when the big CPI numbers drop. That's my favorite thing ever.
Can we just do like one thing before I go?
Yes.
If you see my screen, the market has actually priced in 3% cut in 1 year. How many cuts is that? That is 12 cuts in 1 year now.
Yeah.
As that one at okay, maybe not. Okay, not 3. It is okay. Math. I'm not doing math. 2. It's 2.5. It's 2.5% cut.
Yeah.
In the next 12 months, it's expected. So that's a bit that's expressive. That's a bit rough. So
it's aggressive, and the thing is, if you get inflation that does not continue to play nicely here, then that gets challenged. And we have been looking at a stock market that's been on fire this year. It's been up and away, and so it is priced for perfection. It is currently still priced for that soft landing, and if it doesn't perfectly align, we've got Houston, we've got problems. So we'll have to see how inflation comes in this week. Ivan does offer for everybody who is listening, if you guys are looking for one-on-one coaching, if that is something that would be beneficial to you, he offers that. If you'd like some information about Ivan's coaching services, you can find it inside of our Discord channel. If you are in there already, if you're a member, you can send him a direct message about it. Or you can find out more information if you're not a member with us on his YouTube channel. We'll drop the link to Ivan FXW here in the chat. That is his YouTube YouTube link. We'll drop that here in just a second. There it is. Boom. Make sure to go subscribe to Ivan. And Ivan, I'm sure we'll hear from you more this week as we gear up for the Consumer Price Index this week. So thanks for tuning in.
I'll be back.
You certainly will. All right. See you, Ivan. Okay, guys. So yes, this is a pretty monumental week. We're going to be watching all sorts of different markets. We've got a ton of coverage lined up for you, as it is very, very important. You've got the Consumer Price Index, the Producer Price Index, and you've got the Fed meeting next week. But I want you to understand that the meeting itself will be volatile. It always is. But so will this week, as we get the last round of data points, which will help the Fed make their final decisions next week. So it's kind of like the last statistics will drop this week. So you really want to pay close attention. This week has the potential to move the markets quite a bit. We'll be watching things like gold, which is flat today, indices, which are up today. And we've got, of course, we'll watch yields, bonds, currency pairs. We got coverage here for the entire week lined out for you to help you stay on top of the latest. If you're new here, make sure to hit the thumbs up button and subscribe. And I think it's maybe now time to make the big announcement I discussed earlier. I hinted at it earlier, but we are launching something brand new here at A1 Trading today, which is really exciting. We're partnering up with Chris Pulver for this, who many of you guys know and love him. He comes on the show all the time. He is going to be officially sharing a service with us where you guys can see all of the trades made by the one and only Chris Pulver. We're launching it. It's called the Pulver Alerts. And in fact, what I'm going to do here is I'm going to show you some information about it on the screen, where you can find out more information. If you're an existing member, you can find out information about this as well. So if you go to Pulver Alerts on our website, go a1trading.com/pulver-alerts, or head over to a1trading.com. Under signals, you'll see Pulver Alerts is a new tab available. You got to access it from your desktop. But if you'd like to get access to this, Chris is he's going to be on in just a second with us. We're going to roll a quick promo here about the new service, and then we're going to tell you all about it. It is a really exciting thing that we just launched with Chris. And man, am I so excited to see this. This is some really great value to our Discord community. And we'll have some information just after this. Check this quick little break about it out, and then we'll be speaking with the man, the myth, the legend, Chris Pulver. Stay tuned.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
All right. And we are here with the man. Hey, I just saw you in an ad, Chris. What's going on, man?
I saw that too. I looked
You're
a little
everywhere.
looked a little rough with that beard, man.
That's okay. You're clean shaven. It's Monday. You're here with us. So I was just bragging on you for a second. So guys, Chris Pulver, he's launching a service with us. It's really exciting to have Chris and I. We do shows together all the time. We have been trading side by side here for a hot minute on YouTube. So it was only a matter of time we got this service sorted out, something we've been wanting to do, and finally got around to getting all sorted out. I just wanted to mention, we did mention that if you would like to ask questions about this, get set up with the Pulver Alerts, a great way to do that. I know a lot of people will probably have some questions. You can speak directly to a member of our staff. We have some lovely people in the back here who can answer any questions you have about the new Pulver Alerts. We'll drop the link to chat with us directly here in the chat right now. So send us a direct message here if you have any questions about the new Pulver Alerts service. And speaking of Pulver Alerts service, Chris, what's on the horizon? We got a big bounce back in stocks today, huh?
For sure. I'm debating on playing it a little bit this week. Near term, I was actually looking before I jumped on here with you, Nick. I was looking for maybe a little bit of a butterfly spread today on the ES. I ended up, pinning a nice little trade last week on Friday, turned like $7 debit into around $38 credit. So that was a pretty nice return. Let's just talk basic stuff. So I heard the tail end of your conversation with Elvin, and going into this week's trading, let me go to one workspace here. I got lots of them, so let me go into. Is this it? This one might be it. Okay, so the market last week with employment data was pretty rough for the U.S. The market turned sour. Tuesday was a big dip to the downside. Wednesday, Thursday, indecisive. Friday, bad to the downside. Markets are up a little bit today. They're stabilizing. This week, it's Wednesday, Thursday inflation data. It's all going to be about the Fed and what the Fed's likely going to do next week. I thought was really interesting. I did a video on this over the weekend. I wouldn't be surprised, Nick, if we end up finding the 200 exponential moving average on the S&P. This is the SPY. We didn't find it. If you go to the futures feed, we just missed it. But we're over 200 bars away. And I have a feeling, again, feeling isn't what I trade, but I have a hunch that this market is going to be giving us some indecision as we go into the election. Because I think it's going to give us a lot of volatility. Yes, there's inflation data this week, and yes, there's the Fed next week, and yes, there's 6 central banks around, September. But then we have another round of employment news and another round of inflation news before we get to the election. Now, tonight at 8 p.m., we do have the first debate between Kamala Harris and Donald Trump.
Yep.
I don't think that's going to be a market mover necessarily, but I will be watching the futures market just in case. But I don't think I would be surprised to see the market not really go anywhere over the next maybe month or so, simply because all this stuff is bubbling and the market just needs an excuse to find a way to rip higher, rip lower. And I don't think it's going to have enough evidence to do that, right? This is still kind of a wait and see approach for where we're going the next couple of months. And I don't know. I mean, the 200 EMA is sitting right there, right? I mean, we tapped it on the Nasdaq, so the QQQ came down and tapped it. The structure on the Nasdaq looks a little bit different, but we still have higher lows, lower highs. Indecision could certainly be the case over the next little bit. Just a lot of indecision, a lot of volatility. The VIX is up to 20. You go to the Dow. The Dow's making slightly higher lows, but choppy right now. Every time we're poking these highs, we're pulling back. Also, another one that's pretty stretched on this 200 exponential moving average. The Russell, same type of thing. We've been bouncing off the 200 EMA several times. Probably not a bad strategy to look for. Even on the Russell, we come back and find that 200 EMA. I don't think it's a bad spot to look for buying trades. So long story short for me is I did take an income trade last week, and I put it in on Friday, and this was on SPX.
Mm-hmm.
And I put in a 54.10 by 54.05 bull put spread. And all that is a little income play this week for 205. And if I win for one contract, it's $205. If I lose, I'm probably going to wait for this area to be tested and put in some more option trades. And this is a one contract. If I win, awesome. If I lose, then I'm going to do a two contract down here at the 200 EMA. So I'm watching right now that if markets just kind of oscillate, the 200 EMA to me is a big spot to be watching for the next kind of short-term buying opportunity. I don't think we're breaking highs anytime soon, Nick. I don't think we're necessarily breaking the August 5th low without having a trap around that. It's support, in my opinion, right now.
Yeah, I'm kind of with you. I actually watched a little bit of your Sunday video yesterday, and I saw kind of what you were talking about, like with your, no, it was great. And I saw like you're talking about kind of like perhaps we move sideways here. Maybe we see a retest of the August lows. I kind of agree. I think that the market, as we are really close to some of these key events, the big anticipated Fed decision, the elections are like the next 60 days here. So you just have a lot of questions. I don't think it is very likely that you just rip your face off, rips through the high. And I also, wouldn't be surprised that there's some dip buying that goes on if you do get lower. I think short term, I do kind of lean more towards the idea of, I think we have some volatility, we have some uncertainty that could cause markets to, move lower. One big kind of concern that I have is it's a lot more prominent on the NASDAQ, but we didn't take out the previous highs with all that really bullish rally that we saw. Is it a potential kind of formation here where we're seeing a bit of a lower high sequence, which could lead to, again, naturally, some sell pressure, some uncertainty in this market. So Chris, Frank and I were talking about this morning, and this is one of my favorite conversations, is how do I like to short the market if I'm bearish or uncertain about it? And me, I'm very, I'm very conservative and cautious with my trading stuff. I don't like to get big old short on the market when I'm bearish on it. It's a tricky trade. I know you also have your creative ways of approaching it. For me, my creative way of approaching it is staying pretty cash heavy, maybe looking to trade commodities, looking to trade gold, etc. But I did take a very rare appearance short position on an index. I actually shorted.
No way.
I know. I shorted the Nikkei. I was explaining to Frank, I was like, if we get volatility, where do I want to be? Well, you could short SMH if you want to get even more volatility. Well, comparable volatility. But the Nikkei sold off 27.5% in like a week. So to me, it's like, is that going to happen again? Probably not. That was kind of a margin call freak event.
Right.
But is there a lot of uncertainty and fresh fear over there after that? I would say so. We saw last NFP caused a big sell-off. If I'm going to get bearish on an index, I've got to see, first of all, the right setup, but also the Edge Finder gave me this kind of extra confidence here this morning just to look at the Nikkei. Decided, okay, I don't really want to short US indices because they're just the top tier indices, and that's just hard to fight them. But the Nikkei, which again sold off massively last month out of everything, I don't hate the idea of just a quick stop if I'm wrong, and maybe looking for the rollover if indices want to take a bit more of a break. So that's kind of where I'm at. But again, still sticking. It's a small position. Still sticking to my traditional ways of shorting the market or staying cautious, which is just keeping cash heavy. And if I do enter, maybe looking at more defensive sectors. In the last few months, Chris, utilities, financials, staples have been doing quite well. Meanwhile, you've got what is your money done for you if you've sat waiting in SMH all year long? Well, it may surprise some listeners to hear that I believe that we are just barely in the green for the year on semis. I mean, it is in the green. Wait, hold on. Let me semis. Now, this one is the one that's weighted heavily towards NVIDIA. So you still had a good year here. But if you take a look at like SOXX, you can see here that through January, it's not that impressive. If you take out NVIDIA from the picture, which was up as like, what, 3 figures this year, over 100%.
Also giving a decent amount back.
Yeah, it's also given a good bit back. But if you're just taking along on the semis, or if you traded XLK this year, XLK's been good. But still, you've given back massive amounts of your gains. Here's January till now. See, it's up 7.5. At one point, it was up, well, let's call it 25%. It was up big. So, yeah, it's. I think that the chart has broken a little bit. The easy uptrend has been showing signs of slowing. So that's kind of where I'm staying cautious. But yeah, just my thoughts on it. I want to also ask you really quick about the dollar index, gold, any of those, currency world. What are you seeing there? Dollar index bouncing off its lows here, but still taking a big beating here recently.
Yeah, I mean, the dollar's been garbage the last couple of months as the market priced in the pace of the cuts and when the cuts are finally coming. But one thing that kind of changes that tune right away is this week the ECB is forecasted for a 0.6% cut on Wednesday. That's a big chunk, man. I mean, we're going back and forth on 25 basis points and 50 basis points. I think you and I would agree that if the Fed does cut by 50 basis points in September, it's probably not a good thing for the stock market.
Yeah.
I think 50 basis points historically has always been a bad thing when they cut aggressively going into we're in a recession. That's pretty much what the Fed would be telling and admitting to the market. But if the ECB, on the other hand, is like, we're going to cut 0.6%, I think that gives I think it gives a decent floor in the near term for the dollar to rally. The only true correlation with the dollar index has been euro dollar. As this dollar index has made lower highs, lower lows, the euro dollar flipped this around. You can see euro dollar pretty much the exact opposite, making higher highs and higher lows. But we recently turned off this major 112 resistance area. And although I'm not short right now, I think the DXY is a better DXY is a better trade for me in the near term to say, look, if I'm liking this dollar here, stop loss below, if we just eat back into this structure around 102.50 to 103, I think that's a near term trade. So if this is holding the lows, I mean, obviously we could deal with just some chop in here, but I wouldn't be surprised after months of selling that the dollar just pulls back a little bit, finds some structure, and then this is the area that I would say, okay, if the dollar bears really want to rip this thing lower, then that's where I'm looking for the drop. Because if they get through this 103 handle, I'm sorry to say it, Nick, but this dollar is probably going to be more resilient than people want. And it was a good run, but it was a tricky freaking run, man. Like the dollar index was pretty clean to the downside, but I can't just trade the dollar index. I had to go find currency pairs, and they didn't look like this. Euro dollar was fine. Pound dollar was okay, but the other ones were literally like ups and downs, and then finally caught this, and then flash, and then caught that. They were all over the place, like Aussie dollar, New Zealand dollar, dollar CAD, dollar Swiss, dollar yen, of course, is just doing its own thing. So the dollar has not been the easiest basket to trade, although this analysis seems like pretty clean. So I think dollar in the near term looks decent for support. I will keep going back and repeat this over and over again for the last couple months. If we're going to see a stronger stock market by the end of the year, I do think the dollar has to get a lot weaker. So I like dollar weakness. I'm just not ready to say a couple ways, right? If I believe in dollar weakness, I could be short now, small, short here, stop loss above, and then go after, fresh lows or hit the same lows again. And then if we can break fresh lows, now we're talking dollar weakness into, a symmetry play around like 95 or 94. So there's plenty of room to downside in the dollar. I guess the only hesitation I have is you have 6 central banks that are likely making some moves this month. And the Bank of Japan, although they're not holding rate, the hold rate's at probably 0.25, but the Fed's going to cut most likely. ECB looks like they're cutting in a bigger way. Bank of England, Swiss National Bank, if all these banks start cutting, I don't know if that's good or bad for the dollar necessarily, but it brings everyone back in line with all the central banks are turning dovish,
Yeah.
so it could just be a lot of chop. And so I don't know. I like, especially in Forex, I like trading wide open spaces, and
Yeah.
I don't really have it. So if this is a near term trade, stop loss below, going after the midpoints and some of this structure, that's about it in the near term. But the bigger picture is if we turn bearish, there's lots of space to the downside in the dollar. I just have to see a little bit of confirmation. That's all.
And here's a question for you too, Chris, because you
Yeah.
mentioned mentioned the concept of central banks globally looking to cut interest rates. If that
Yeah.
accelerates, that the ultimate way to track that, in my view, is looking at gold, right? Because
Yeah.
if you get global economic global economic concerns, all the central banks wanting to cut interest rates, which has been a large contributor to the gold rally this year. If you get that scenario surface, if you get that story picking up again, could that be the catalyst to see gold go higher? And also to your point about the dollar, which the idea of maybe a bigger bounce for the dollar, that could also send gold lower in the short run. So it's very much like watching the US, but also watching global central banks. Like, what are they going to do? What are they consistently seeing? Is China under pressure? Is Europe under pressure? Where are these other central banks headed with their you mentioned the ECB? If they start cutting rates aggressively, if see the UK start cutting rates more aggressively to sort of try and stimulate the economies of the world, what that does is it paints a picture where tons of currency is getting printed. And as many people will know, a ton of currency being printed and uncertainty surrounding the central banks can lead gold to skyrocket. So 2,500 on gold. I mean, at the start of this year, Chris, my target for gold by the end of year was 2,280, and that felt aggressive.
Yeah.
Gold continues so far to outperform all of the major U.S. stock markets, or the stock market indices. The Nasdaq, the S&P, the Dow. Gold's been this silent, winner for the whole year. I mean, the reason I say silent is because recently, look at this chop. It's been horrendous. It's been so back and forth, no decisiveness. If you were somebody, this is a good example of a time period where if you had bought, trying to go out of the money calls, thinking gold was going to be super bullish, even though the market went up, you could still have lost a lot of money just to, time decay and the moves happening, but moving in slow motion almost.
Right.
But it is an impressive rally on gold, to say the least. And maybe what's most impressive about that, Chris, is commodities have gotten absolutely demolished while gold continues to chop higher.
Yeah, I mean, I think in commodities too, we're probably not going to see a big rip in commodities until we have like a full-on recession. We've got to start like a rebuilding phase. That's going to be like the full spectrum of going to value is going to be where you see your commodity boom. I mean, we can take a look at. I mean, gold is up to crazy highs and it's been outperforming the indexes this year. You'd mentioned this. I mean, I don't think that anybody would have imagined as we started out 2023 carried by Mag 7, started out 2024 carried by AI, that we'd be talking in September with financials and frickin' utilities leading the S&P sectors. It's
Yep.
not, I mean, and by a decent margin. I mean, why financials? I don't know why they're doing well when we've got a wake of rate cuts, unless they're just financially healthy. But utilities, typically not a sector that leads anything in a bull market. So the good thing is you see everything year to date is green, so that's nice. But consumer discretionary is taking a huge dip recently, and so they're pretty much flat for the year. Energy, I mean, oil has been down a ton. This also probably goes along with the conversation this week on Wednesday CPI. Energy, oil being down 15-20% in the last couple of months probably helps the inflation picture for right now. But yeah, it is kind of a wild sector move, and we've seen more like last week when we had the sell off on Tuesday and Friday. We saw a lot more day to day flows into like consumer defensives. So does it change? Maybe. Is it full on rotation? I doubt it. I listened to an interesting podcast this weekend where a lot of this data has changed too. Like we go back and we're looking at pre 2008 or the last 30-40 years. The market's not really made up of the same thing. Like right now, the US market between tech and consumer discretionary and communication services, that's like 40 or 50% of the S&P. Like the
Yeah.
US is like heavy tech weighted. And I just think that it's not the same. So I mean, as
Well, Chris, in
we
2001, you know what? Oh, you might know. Do you know what sector led? Or the 1995 up until 2000. Do you know what sector like dominated the S&P? It surprised me. I didn't know this.
2001, what sector led the S&P?
Yeah, like which one was like the dominant one? It you may or may not know it, but it I'll give you a hint. It's not any of the ones that you just listed.
uh, tell me materials led.
That's close. Consumer
Industrials.
staples. That
Staple.
was the
Oh, okay.
time
Yeah,
of the
there's your risk off.
staples.
Yeah.
Yeah. Well, and that's crazy because 1995, 1996, but it was like your I forget the names, but like your big, super boring stable companies that were just eating up monopolies all over, and people were
Sure.
just piling into those names. But to your point, you know, that changes over time. Just like that surprised you and me both.
Yeah.
Like technology, consumer discretionary, and communication services. Today, they're the big ones. Today, they're the dominant ones. But what will that look like in 10 years? What will that look like in 15 years? I would argue that technology is not going anywhere, but
Right.
that doesn't mean that technology is exempt from 50% corrections,
Agree.
ginormous sell-offs on perhaps, I thought about it, Chris. I want to ask you about this too, because last week on the S&P 500, we saw jobs data that came out, and it wasn't horrible. You had good jobs added. They revised the previous one. That was not good. They revised the previous months down from an already bad number. So that was not good. Unemployment rate, though, was slightly lower. So there was a mixed report on Friday, arguably. Some people would lean more bearish, like myself. But the bigger thing here is that I heard a lot of people talking about it this weekend. Yes, that jobs data was mixed, but we can't afford on this market, which is priced so richly. If you're going to see massive growth, massive, continuous spending into the AI stuff, like you need to have strength in this economy to deserve the multiples that, stocks and the big companies are holding. The Mag 7 is priced very expensive. And if you get any sign of a harder landing or any slowdown in the economy, those multiples are going to get challenged. And for listeners, multiples, what I'm referring to is like the price to earnings, the price
Yeah.
of the stocks relative to their actual, earnings and their earnings growth into the future.
Let me throw something out there with you. Investors today, if all you did was invested in Mag 7 and just said for the next 10, 15, 20 years, I'm just going to, and obviously we know that like Mag 7 can rotate, right? We had Fang that became Fang Man that now is Mag 7.
Yep.
So that's subject to change, but I don't think that the stock market necessarily goes gangbusters upside without them. And I don't think the stock market, drops a ton without them also struggling. So, also if Apple, by the way, if Apple were to drop, 30%, do we think that we'd have emergency rate cuts? Do we think we'd have a Fed put probably coming right back in the market again? If all of a sudden Apple were to, I mean, outside of some type of like, systematic risk where it's like, it's all about Apple and they're fudging things up and they completely botched a iPhone launch that's supposed to be this week, or is it today? Maybe Tuesday. But let's say Apple is down, I mean, it's funny, like it was down actually 25% earlier in the year, like when we had that rip, but let's say we drop like 30, 40% in Apple, it's going to drag the market. I mean, if your top three stocks, Apple, Microsoft, Nvidia, Nvidia's been all over the place and has just shed like 200 or 300 billion in market cap, if not more. I think Nvidia is now down to like 2.5 trillion. Nvidia is down to 2.5 trillion as a high here around 3.2, 3.3 trillion, like just a crazy amount of volatility. And I did actually note this in Nvidia, a high, low, lower high, lower low. I have a bunch of ratio spreads. When we had that big, sell off on August 2nd and 5th, I just sold a bunch of options. So I sold a bunch of puts. I did a bunch of ratio spreads. I collected a lot of income on those trades, but income that I'm saying, look, it's cash secured. So even if I get filled on Nvidia, I'm going to own the stock around like $67 and change. Let me check here. If I go to my Nvidia feed, let's go here, Nvidia.
I got to tell you about my Nvidia trade too, Chris.
Let me hear about it. So 75 by 55 is a bull put spread, and then a 68 by 67 is a ratio spread. So I could own the shares at around, I'm trying to think what I collected on this trade. So that ratio spread, I'm looking for it in my history here, October 18th. So that ratio spread paid me $1.10, plus I have
Mhm.
the $1 bear put spread. So I'd own the shares. Let's go $1.10 minus $1. So 2.10 minus assignment of 67. I'd own shares of NVIDIA at 64.90. I would gladly take some NVIDIA, use some options around the core position, lower the cost basis like crazy, let this thing rip and say, look, I think NVIDIA has what it takes to, even if we don't get back to all-time highs, but we probably could just say that's a nice target. Even if we owned it at 65 and it comes back up into, let's say, a lower high, if we did this, somehow we come down, I get assigned, and it comes back up and makes a lower high, but we're trading at $110, $115. I will flip that stock, dude, for 40, $50 a share.
Yeah,
So
it's
anyway,
fantastic.
that's short-term stuff versus long-term. But what's your Nvidia trade?
Mine's long term,
Okay.
for sure. But I'll show you what I got here on my screen. So really boring. Cash secured put. Sold it at 95. That's the fabled number that we talked about for months now. Is the
Okay.
$95 price on Nvidia. I sold a put on Friday, like 5 minutes before the bell, which obviously, nice little premium. It's a month out, so it didn't really have that much theta decay already. But just basically talking about, well, I have a small position in Nvidia. I have 42 whopping shares, but a willingness to buy 100. So I sold one contract here. And my thought process on this is, you and I were chatting just off the stream a little bit about just kind of like looking to dollar cost average on certain things.
hmm
Nvidia, for me, as dangerous as it may sound, because everybody loves to draw the comparison to Cisco, dollar cost averaging on Nvidia to me actually seems like a reasonable approach. It's a company that I think if you're gonna get tech to continue to lead in the coming decades, maybe not only Nvidia, but the semiconductor space in general seems like a space I want to own. So I sold a put right before the bell. Ended up being, a nice start to the trade, but it's not a huge potential profit maker. But just want to kind of throw that out there before suddenly I'm in a big Nvidia position over time. This is the early days to kind of start into dollar cost average in my own creative way, which is basically I sell cash secured puts. Which is kind of advanced if you're new to options, but it's really a basic strategy. You're essentially collecting premium if it goes nowhere or up, and you are getting assigned or buying the shares at the agreed upon strike price if the market moves lower. So, Chris, we've got Frank who's going to be joining us here in just a second. So I'm going to leave this show to you guys. But before I do, I just wanted to reiterate, if you guys are interested in getting access to Chris or myself or Frank's signals, we share all of it in our Discord now. So if you'd like some information about that, we'll drop the link here in the chat. We're doing a 30% off sale this week. And for people who are listening right now, you can get 35% off of Chris's service, my service, and Frank and I's service. We run it together. So all of that information can be found by chatting directly with a member of our team. We'll be dropping a link here in the chat to speak directly with someone on our staff who can answer any questions you have about the services that we're offering. We just launched Chris Pulver's new service within our Discord, which is really exciting stuff. Get access to every trade that he's taken. You can also sign up for ours and see what we're trading. We trade everything from FX, indices, commodities, options, all of it under one roof, if you will. So come join us if you haven't already. Here's the information. You just send us a direct message there. And all right, Chris, you and Frank got it from here, man.
All right, thanks, Nick.
All right, man. See ya.
Bye-bye. On the note of, I just posted a trade alert actually in my futures trade section. So my section with A1 Trading, I have my trading journal, which I'm posting, daily recaps or videos that I've been doing on TradingView and Twitter and YouTube. So that trading journal section's been very active the last 3-4 weeks. And then now that the service is officially starting, index trades, commodity trades, Forex trades, stocks, options trades, and then futures trades. So futures, now that could be a tricky situation, right? It's like, I'm not day trading futures. I think the time sensitivity of that is, it's a grind if you want to be in the futures market. So as far as like day trading, so that's not the type of service I want to run with like my futures trades. But I just issued a trade here on the ES. I'm looking for a trade right in the lows. What's up, Frank? How are you, man?
Chris, how's it going?
Good, dude. I put in a trade. I'm looking for, Frank, you might like this one. I put in a butterfly spread and I did a 5,400. So that's my -2. I did a 54.30 and then a 53.70, and it was a $3 debit. So I'm risking about $200 on the trade. If price is up today and then fading tomorrow, I'm looking this for a Tuesday expiration. And if price, if price is going to be right up here in real time, and if price comes down a little bit tomorrow and gets into my profit trap at all by end of day tomorrow, which is around 5 p.m. Eastern time, that is enough to turn a $3 debit into maybe a, 10, 15, $20 credit. Max profit would be somewhere around like $27 a credit, which is what I experienced last week. I actually took 2 losses and had 1 win and ended up making like, $20 net credit last week, which is pretty sweet. So I'm going to pick a few battles like that. And I just posted that first trade. I also have a pending order in CL for an oil trade. So I'm starting to fill up my my trade journal here. So anybody that's jumping in with Frank signals or Nick signals or myself, there'll be plenty to choose from. So it's not to be overwhelming. It's just this is what I'm trading. I'm pretty active in everything. Most of it's all risk defined. There's nothing crazy. But obviously with you, tuning into the sessions like this, taking the live trades, we can track everything as we go along the way. So anyway, that's what I got kicking around right now in ES, Frank. And then I also have an income play on SPX this week. Thoughts on direction? Any thoughts on direction, Frank? What do you think?
Right now, I don't think we're really going to move anywhere, not until Wednesday.
Agreed.
And even so, I don't think the market will necessarily move anywhere unless we get a higher CPI. So if CPI comes in lower or slightly lower, stays the same, I don't think it's really going to move the markets that much because they're more focused on labor.
For now.
But seeing that stagflation issue come back is going to be pretty detrimental. And I think I might look for a trade on gold here, depending on how I'm feeling. I think I want to wait for the numbers to come out at least. Because gold could come down and test that upward trend line. And I still have my VIX call that's in play. It expires October 2nd.
Okay.
And
can I ask you on the VIX play, if that VIX play doesn't work out, I hope it does. I could see September give us another round of volatility. But if it doesn't work out, would you be willing to kind of re-up that trade for maybe a play through the election?
It's hard to tell.
Yeah.
I think September is the month that I think we're going to see lower lows. Maybe the start of October, but I'm always like skeptical because most of the time the market moves higher. So what I've been doing is I've been taking these VIX plays, whether they're verticals or just calls, and they haven't worked out. So in the meantime, what I was doing was having these bullish verticals on the NASDAQ and collecting profit and either break even or making some profit off that. But what I'm doing now is I'm not really confident in the vertical plays for the indices either. So I'm doing these on the SPX on Webull. I'm doing these bear call spreads. So above price. I took one this morning for I sold a call at 54.90.
What trade is this? Sorry, Frank.
SPX.
Okay.
I sold a call at 54.90 and bought one at 54.95, and that was $1.20 credit. Right now it's at 45 cents, so I'm up about 60% on the trade.
Nice.
But the thing is, what I've learned about these 0 DTE trades is that I could close out now and it would be nice profit, but if I let it expire and if it's out of the money, it won't count as a day trade. It'll just expire, won't get assigned, or it won't close me out because it'll happen after 4 p.m.
Yeah, that's good.
I'm not really sure the logic behind it exactly because it's not exactly a day, but I've done this before a couple times and it hasn't counted as a day trade as it expires out of the money. So I'm kind of hedging myself. I'm selling calls while remaining short. So if it goes up, that's fine. But as long as it doesn't go up higher than I'm expecting it to, then I'll collect profit on premium And then if it moves lower, I'll make some money on the premium and VIX if it decides to move higher. So that's kind of what I'm doing now. And what else? Mostly that. I'm just looking for short-term sells and then longer-term projections to the downside.
Okay. I think I'm going to look at this for a short-term bear trade as well. So I say short-term. I'm just going to look at an options trade. If I looked at the MNQ, which is a micro NASDAQ futures trade, I think what I might do is I'll buy the 18,000 put, and I'm going to look to see if the NASDAQ is capable of testing lows. But I'm also going to buy out further. I'm going to buy the highs. So all in all, this is probably going to cost me, maybe $1,000 buying power with unlimited profit. If we really have some type of vol event, this will pay really nicely. But then up to the highs, I'm probably gonna go out to like January, February, March of next year. Let me actually price these out and see what they look like, dude. So if I go 18,000, I mean, I could go to the lows at like 17.4, and this would be like way cheap. But obviously, if I'm wrong on the timing of this trade, then I'm going to make very little on the trade. But let me see. If I did 18,000, it's a 477 debit. Right now, that's a max loss of about $950. This is a hedge trade for me, where I'm going to risk about 0.5% of my account. If anybody that's following any services too, it's like, make sure you know what instrument we're trading. Make sure you follow the details we put into this to the service in the Discord alerts. But if this is something where it's like, I can't risk $950, then don't take the trade. Please don't do anything that is silly for your risk trading and things like that. Like just focus on what you're in your wheelhouse of trades and what makes sense risk management wise. But if I go out to November, here are my thoughts. I think we're going to have a lot of indecision, but this incorporates the following: this week's inflation, next week's Fed, all the drama in September. So if we do revisit lows, this will be in profit. Any other employment news coming into October, employment news coming in November, and it also incorporates the election. So if anything looks good to the downside over the next month and a half I just talked about, 18,000 I think is a pretty reasonable spot to say we can grab some profit. Now, my profit target would be if we're going to sell off and slide lower, we get down to this low, we hit the 18,000. If it happens in time, I'll have my my value will increase. I might take a whatever. If I'm up a couple $1,000, I'll probably take profit. If we test the lows, I'm probably going to take profit because I think that's also a buying opportunity. If we kind of bear trap those lows.
Do you see the had a butterfly there? I'm sorry.
No, not on the MNQ. On the ES, I've got a butterfly in the ES.
You had a butterfly at the lows by like the end of
broken wing.
Oh,
yeah. Okay. So I'm doing an ES. So I know I've got a crap ton of stuff going on. I've got broken wings up here. I have a broken wing down here. I have a butterfly spread here. I have a bull put spread here. So I've got some income stabs, all different expirations. They serve all sorts of different purposes. When it's all said and done, likely profit. This is one that gets in a little bit more in the trenches of like, I'm taking a short-term stab this week. But we'll see what happens.
So you're bullish this week.
Well, I look for a pullback, which we're literally seeing it today. So honestly, if I'm bullish this week, part of me is thinking that if we just go nowhere this week and maybe the inflation data just comes in right in line with expectations, maybe the week is quiet, maybe the week pushes lower. I don't see inflation being so optimistic that the market rips all the way back to highs again. And so I'm mostly tilted slightly bearish this week. And so even though I have a bull put income spread, if I have my butterfly, I'm going to try to focus on what I did last week, where those like little butterfly spreads with a bearish tilt. And so if price is here, right, and I do my butterfly spread like that, and price, works its way down slowly and then gets into my profit trap, I can turn a $2-3 debit into $10, $15, $20 of credit. And I take that type of payout. I don't have to win a lot of trades like that to still make a lot of money. And so the hard part is trying to like time it for the day. And so I'm going out like, I don't think today is the day that we drop all the way to like 5,400 on the S&P. So I'm going out to tomorrow expiration. I'm kind of doing like I like to go back and forth. I do a lot of like 1 DT when I come to those butterfly trades, unless I'm really feeling that I've got, a good vibe on what the market's doing today. But yeah, that's where I'm at. But I want to get these priced in for us or for me and see where we're at. So if I did an 18,000, My max risk is about 956. Now I could go further out of the money. That's $250 lower, and I can reduce my risk by about 120 bucks. But I do want this trade to offer up some type of profit. Now, if we see the expected move hit, let's get to this point. If we have the expected move hit, and this is well before expiration, I can probably take this debit at 475 and maybe turn this into like $600 or $700 of credit, which gives me a net, $200-300. So I think I'm going to take this trade. So the long put at 18,000 out to November, and I just think it's there for like a necessary hedge. To me, this is a slightly better hedge than what I was doing. Like, when we had that crazy drop in April and we started to pull back in those fade zones, I started to get a little bit heavier on some bear put spreads, and they just freaking backfired. And I was risking about the same amount, but this seems to be like a slightly easier trade. I can buy myself a little bit more time. And that way, if there's any chance of going lower, that I can get, nice chunk of profit on the MNQ. So I'm going to do that right now. 475.50. Let me see if I can get, this should be hopefully cheap enough to pay 475 or less. We'll find out. Let me see what this debit cost me. So I'm going to go 475 here. Let's go 475 there. The field at a 473 debit. Perfect. So let me go. All right, I'm going to match this up. Similar. Everyone's going to get a little taste of this one. So let's go 9732. All right, give me about 60 seconds, Frank, to get these trades activated.
Yeah, I think what you were saying about like the slower tick higher is that might be what we get this week. CPI might come out, and whatever it is, could just not cause any reaction. So I'm hoping that at least the IV is high, so we can look for more sells on these.
Agree.
Not like bearish things, but sells on option contracts, collect some premium. Because I mean, Friday was a big down day. I think it's going to take. I feel like it's going to take a lot to move higher or lower than last week's move. So
agree. Yeah, I mean, we can look at even do you like a broken butterfly above like the August 30th high? I could totally take that trade in like an SPX NDX. A broken wing, so we have a bit of a profit trap, but let's see what the credit situation is. Maybe I put in like a pending at like $1.50 to $2 and go after some income with the profit trap on top of that. So
do you know what I want to do though?
What's that?
Well, let's do that first, but also I don't know the time frame for this, but I kind of want to do a similar strategy to what you had with the butterfly, but at this 200-day, like either next week or something, just when the FOMC comes out, because I feel like this is a good spot to test if say the Fed is pretty they're ultra dovish because they're trying to save the market. That's not a good sign.
Yeah.
Just
so
whatever.
Where do you want to play? Where are you thinking of placing it? If you like a broken wing butterfly, where you want to place that?
Not a broken wing, but
just a regular butterfly.
The ones.
The big payout ones.
Yeah.
Yeah. Okay. So the toughest part about that is the timing, because you could be right. Like example being, let's say we go into like, give me a price level. You're talking like SPX, NDX. What do you want to trade?
SPX.
SPX. Okay. So you want like a butterfly down here.
So like a 51.50, I guess.
Okay. Yeah. Let's take a look at that. Let me do one thing really quickly here. I'm going to throw this into Discord. So let's go futures trade. I'm going to throw another one in here. M and Q. Oops. All right. I'll get that ready. 11:15.
But you said a broken wing at the August highs.
Yeah, I want to talk about that.
But you wouldn't do that necessarily right now, right? You would kind of wait for if price decided to come higher.
Yeah. So it'll be a pending order because I think that we're going to get like garbage credit right now. 18,000 to 17.
You're talking about like a week out.
Yeah, let's take a look at it. So if I go SPX above the highs, we'd have a broken wing starting at like 5,650. Let's go to the chart here. So SPX. So SPX trade. So we can look and see, like, you know, hey, this Friday is going to be the 13th. Maybe that's a good trade, but I doubt the credit's going to be worth anything. So if I did 5,650 on I'll just do a call butterfly spread and then move these strikes up. So 5,650 would be my pin. That's going to be the August 30th high. Keep going up here.
Isn't this week the triple witching?
That's a good question. I didn't think it was. I thought it was the 18th. I thought it was the 20th is triple witching.
Okay.
Because that's your monthly options expiration. Yeah, I think it's the 20th. I think.
Okay.
Because it'd be the third Friday of the month if it falls on that.
Gotcha.
And then you'll also have your OPEX this month as well, with the end of month on the 30th. So we could definitely have some intense volatility for the month of September. So all right, if I did 5,650, let me double check that strike. So 5,650 is right up here to pin this thing. Likely the credit's going to be not great. So if I did a 5,650 and I do my skip strike, so I can get 10 cents credit. I'm not taking that trade, but I could. If here's what has to happen here, Frank. If price were to rally up this week, this 5-10 cents credit, you know, maybe climbs to 50 cents, maybe $1. I'm going to go ahead and place this trade and go after $1 credit. If I get filled at $1, that's $100 I generate per contract, and that's a nice little income play. I'd still put in a profit trap about $5 wide, which gives me a $500 max profit, and that's by this Friday's expiration. Now, I could not just do it to this week, but go to next week, and maybe we'll see this jump up in price. So watch this expiration. So I'll keep this, go to expiration here. If I keep the same strikes, okay, skip strike, it's only offering 10 cents of credit out to next week. It's not really any better. So I think what I'm going to do is, if we see price go up a little bit, if we see price go up here, this may be able to fill for like $1. I'm going to try it. Again, it's pending. I might just leave it there for a 9/13 expiration, which is going to be Friday. If it fills, cool. There's I get filled for $1, fine. I have a profit trap of around $5 credit, and then I'm risking about $4 credit. So I'd risk $400 to make a profit trap of 500 with an income play of $100. If price falls, this trade never gets filled. No harm, no foul. I'll just let it, cancel itself out when it doesn't get filled. Does that make sense?
Yeah.
Okay. So I'm gonna put that trade in.
What was the limit though?
I'm gonna go for a limit credit of $1.
Okay.
I'd like to say I can go higher, but we're trading at 5 and 10 cents right now. So for it to jump up to $1 or more by this week's expiration is probably slim. Like right now, it says this is a 92% chance of profit if I were to take my 10 cents credit. Obviously, I'm not going to take $10 of profit for a $490 risk. That's insane. That's a Frank trade. You got the stones to take trades like that, right?
I coined that.
Yeah, that's right.
You coined that for me.
Yeah, that's right. Okay, so I'm going to go for $1 right here, and then let's see if it gets filled. So I'll go $1. So my sell strike is 56.50. My buy is 56.45. I skip the strike for 56.60. It's pretty tight for a butterfly spread. I could go one out and go 10 wide and then go 20 wide and do the same thing, where now I can make up to $1,000 if I'm right, and that gives me a little bit more wiggle room in the profit trap. But now I'm risking $1,000 if I'm wrong. So I'm going to tighten it up, go nice and tight with that broken wing butterfly, and if it works out to give me $1 credit, awesome. So this is going to go into every account as well. This will be for this week's trading. So here, make sure I want to make sure I just quickly don't have any SPX trades expiring on the 16th. I don't actually, you know what? I think I do. SPX. I don't. Good. Okay. Let me check all accounts really quickly. 16th. What did I say? 16th? Oh, that was out to next Friday. Okay. I think that's fine, dude. I mean, this gets us through. My dates are all fudged up right now. So if I said the 16th, what's my trade here? Trade. September 16th is what day? That's Monday, right? That's not the Fed day. Never mind. Let's edit this order. Let me go out to 18th is Wednesday with the Fed. The 20th is Friday. Let's go to the 20th, dude. This might be a little bit better. All right, let's see if I can go to the 20th here. There. Now this trade, not an AM. I don't want an AM there. So I want the September 20th, which is going to be the week of the Fed, September 20th expiration. Right now it's trading for $3, or I'm sorry, for 30 cents. Probability to profit's 84%. What's crazy here, dude, look at this expected move. Can you see my red piece on my chart? This little red shaded zone?
Yeah, the expected move.
Yes. So this actually shows that the expected move could be hit up to a price point of, well, I guess it's not true. 55.85. So trade still fine. It's good. I'm going to take the trade, dude. 84% chance of profit. We're activating the trade for about 45 cents. I'm going to put a pending order in at $1-ish. $1 is, let's go to this. I like to go 30% of the width. So if we go $5 spread, I want to try to collect $1.50 here. All right. I think that's fair. So I'm going to go $1.50. I'm going out to the 20th, and this is the trade right here. So if I go out to the 20th, let me ask you a question, Frank. Do you think that the Fed is going to be able to get the market back up to all-time highs by the rate decision?
The Fed can. No.
Okay. If it's, I mean, anything can happen, right? We can have like inflation's like, oh, it's 2.1%, and the market's like, oh my gosh. But that doesn't change
I'm
anything.
fading every rally. Like
What's
this
that?
morning, I went short and then I sold calls. So
okay,
I don't know. I might be too biased. I wouldn't necessarily ask me.
I mean, look, the easiest target is right here, dude. Easiest target is this thing finds a way to go sideways, go nowhere, go nowhere, go nowhere. And look, how easy is this to think? I mean, I think we make trading way harder than it has to be. Like, what makes sense for the market right now would be, look, it's had a hell of a run up to July of 2024. August was a reality check, and we had a bit of a, Volmageddon event, which was similar to what we had back in 2017, and it was January 2018. But now that this did happen, it was kind of like a slap in the face for the market to be like, hey, idiots, let's make sure that what we're doing is good news, bad news is bad news, and let's see what the data shows us. And so now the market's like really assessing what comes in. We had employment news. It started to tilt the market lower, but did it break the market? No. We have inflation news this week. Is it going to be breaking the market this week? Probably not. It's going to be on pace with something that has been trending lower. So a CPI is lower, and it's probably likely to go lower. There's been a huge slowdown in general, and also oil's been dropping like crazy. So that, even though it's food and energy is excluded, energy prices down 15-20% makes a big difference. Our pay at the pump prices for AAA averages are way down. Like they started out this year at like $3.70 a gallon. Now they're like $3.13, $3.14 a gallon.
But yeah,
that helps a lot of people,
Do you know like the reason behind oil's huge sell-off?
I mean, not all the macro stuff, but I would say part of it is the U.S. is producing at like record levels. I mean, we are pumping oil like crazy. OPEC has been silent, so they haven't said anything. They haven't spoken up and put it in. Like typically, we have the Fed put, but they have like an OPEC put, which is they basically say, look, our members are cutting production, and it tries to like stabilize and balance prices and prop them up a little bit. Libya threatened to basically like ramp up production again, which they were cutting all production. So that was a complete flip-flop. And then also global demand. Like China's been completely slowed down. The U.S. obviously is getting into like a growth cycle that's expiring, or, we're in the final innings of a growth cycle. And so our slowdown as well is leaning on, two of the biggest countries having major slowdown outlooks. And so it's supply and demand. I mean, we have less global demand. We have high records of production coming from the U.S., and Middle East tensions have been somewhat contained where there's not like crazy supply chain issues. And so excess supply, heavy amounts of production, global slowdown, I think is why oil has fallen. Now,
okay,
I'm still buying oil. I mean, at $65, at $60, I'm looking at those support levels. I'm taking credit spreads on those. So I'm still technically I'm long on oil at those defined risk levels, just because I think there's a range to trade. But that's why I think we've been sliding the last, couple, probably 3-4 weeks, been a pretty heavy slide on oil.
Yeah. It's been pretty brutal.
Right.
And I wasn't necessarily paying attention to it, but I see it was at like there's a harsh double bottom on like the daily chart.
Are you looking at U.S. oil?
Let me pull up U.S. oil. So
okay,
it is rebounding today, but there was how far back is this?
I mean,
So
2023, we
wow.
have good support. 2000, let me see this right here. Bond markets warns Fed to slow rate cuts. So back in 2022, back in 2021, those are all the key support levels right around that 65 handle. So I see support, hanging in there around that 65 handle for oil. We're not oversold necessarily, so there might be a little bit lower. But on your chart, do you have anything with like relative strength? I'm showing some divergence here where we have recent lows, and I'm noticing some divergence on the MACD, some divergence on relative strength.
I just have the RSI plugged in.
Okay,
It's 14 period.
that's yes. So
it's not necessarily oversold, like you said, on
Right.
the daily time frame.
Right. I could see some slight hidden bullish divergence, though. The MACD histogram is making higher lows. The RSI is making higher lows, even though prices made lower lows. That is a disagreement. Again, it's their indicators. They're not necessarily calling the bottom, but in anticipation, I could probably see that there's good structure support at those levels. I could see price responding and rebounding off that $65 area. So $67.50, $65 support.
As it's been falling, its average true range has gone higher by like
True.
a point.
Yeah.
So maybe you trade oil futures, right?
I do. I trade CL a lot. I haven't traded natural gas because I think that's more of like a spring to summer play for me versus a like winter play. CL I haven't really touched, and it's been like this. Look at CL, or not. I'm sorry, not CL. NG. NG has been. This could do like nothing right, and we're sitting here at these lows that we haven't seen since 2020, lows we haven't seen since January 6th, 2016, low since 2012. I mean, I don't know what this means, but I also know that natural gas is probably produced in a high supply and crazy cheap. So I'd like to think if I could time this thing, I'd like to be long natural gas and just set it and forget it. But the problem is if I go out to a natural gas futures contract, so if I go NG and I go out to March of 2025, May of 2025, I mean, I could buy something out of the money and have it be somewhat cost effective. Like, let's say that I buy the, $3, $3.15 contract. Let's go to $3.15. So I could buy this contract to May of 2025. But if I'm wrong, dude, I'm going to risk $3,300 to show I'm doing a long call. That's a terrible trade to me. So I'm not interested. I'm not interested in paying more for that call either. So, honestly, if there's like a big, crazy, like just gangbusters move, I mean, maybe it's better for me to buy like the $4, $5 way out of the money. Let's see what that looks like. If I bought a $4 contract, this is way the heck up here. I mean, I'd risk $1,400, but the upside is infinite. So, I mean, I don't know. It sounds good in theory. I probably mechanically can't take the trade that I want, so I probably won't. Like I'll watch it, and I'll treat this just like cocoa futures or lumber futures. Like it's great for those that are like long on natural gas, but I don't know. I mean, maybe the best thing is just to do freaking credit spreads and just keep it super simple and keep it really defined risk, and just hope that we are going higher over the next 12 to 24 months. I mean, I could do that. I mean, heck, I could probably do that right now. If we go $1.64, let's find out. Let's find out, Frank. Let's clear this trade out. Go $1.64.
I don't care about stuff.
You don't care. I'm gonna do
natural gas.
I mean, you use it. You don't realize it, but you use air conditioning is natural gas. Most electric range is natural gas.
Oh, I mean, I care if prices go down. I want them to go down.
Yeah.
But
here's trading it. I mean, right now it's like I'd make $40 to risk $460. That's obviously bass backwards. So I'm not going to do that. But what I could do is put in a pending order that I think is a little bit more fair. Let's say this becomes an at the money trade. So I clear this. Let's go at the money, and I can get a guesstimate of what I want price to fill at, about 25 cents. So that's even. If I said, okay, I'm going to do and I'll do this trade. I'll do it. $1.65 and $1.60. All right. So that means that price comes back down to the same lows. I'm going to go $1.65, $1.60 lows. And I'm going to ask to get filled at 0.25. That should be 250 and 250. No, that's 2,500. So this needs to be 0.025. There. So right there, 0.025 should be, yep. So that's income. So if I did $1.65 by 1.6 for a bull put spread, this means that price has to drop down to my levels, get me filled at the credit that I want, and then stay above here by May of next year. So could I do that trade? Sure. So I'm going to do 2 contracts, $500 risk for $500 profit. Probability of profit right now, it's baked in around 76%. If we look at, a decade worth of lows, maybe there's some line in the sand there where natural gas doesn't necessarily go any lower. So I'm going to take the trade. It's going to be pending. It may not feel it's going to be good till canceled, but I'm going to place the trade and see what it looks like. So, all right, I'll throw this one in. I still need to throw in the broken wing butterflies as well. So let's go here. And buy power reduction. Let me see what that's going to take out of my account. Only $183. That's no big deal. No big deal.
I have an unrelated question.
Okay. Go for it.
So poor economic numbers is usually good for gold. Bad for the indices, bad for dollar. But
Okay.
What I've noticed is that gold has been pretty correlated with the stock market. So it will go up with the stock market regardless of what the news is sometimes.
Mm-hmm.
So I'm wondering if CPI comes in higher than expected, do you think gold actually has a shot of shooting higher, or do you think it's going to kind of crash with the stocks?
I think gold's going to play with our emotions. I think gold is the easiest long-term trade right now. The problem is you're going to see some central, like I say that because central banks are buying gold like crazy. And so let's say that gold drops. Okay. If gold drops, I hope that it does, because I think there are central banks licking their chops to buy more gold. So I want to see gold drop. Problem is, if it doesn't, it just goes higher. Just like I've said for many things, I have a hard time justifying buying at all-time highs and continuing to buy at all-time highs. So I'm just buying and holding and trying to scale in for additional trades. But I think there's a massive, massive bid in gold pretty much permanently now. And that's because there is an alternative to the dollar. I think, debt holders of the U.S. treasuries, China being one of them, Russia being one, Japan being a big one, I think they're also padding their balance sheet with gold. So I think that's part of the reason that we had not just this big run in gold from this choppy zone, but like this first rip we saw, into 2,200 and this big run into 2,400. But I don't know. I mean, I kind of want to see gold just take a little break. But is there anything that you would be doing that says like, okay, I'm out of gold. It's too bearish. What would gold have to do? There's structure here. There's structure here.
See any. What I'm thinking about is selling an iron condor on gold's price where it's at. So
Okay.
looking
what instrument?
To September 11th.
GLD. What instrument, dude? GLD.
GLD.
Okay. All right. Let's go GLD. Yeah. I mean, let's take a look at it. Let's price it out. I don't think it's a bad trade. Gold has been sideways for a while. I don't know if let's think about this. So this is the only thing that would concern me about the trade, right? If your expiration is out past a bunch of central bank news, like we have over we have ECB this week, but the same week we have the Fed, we have the Bank of England and the Japanese yen. What's that?
I'm talking about in 2 days.
Oh, you're going out to 2 days, so September 11th?
Yeah.
Never forget, dude. That's probably distasteful, but anyway. All right, what do you want to do? Iron Condor?
Yeah.
Okay. What's your sell leg?
I was looking at 234. Oh,
Okay.
sell. Sorry. 232 and 229.
Oh boy, you're going tight. 232 by 239.
Well, if you go out too far, it doesn't really get you anything.
Okay, so you're going to get 70 cents credit for a $7 risk. Just saying.
Well, no, I'm looking at this is $1.08 for I think it's a $3 risk.
What? Didn't you said a 232 by 239?
No. I said You said on the sell side. I'm selling a put at 229, selling a call at 232.
Oh, so you're going to do a strangle then, not an iron condor. That's a strangle. You're
Well,
going to put.
this is part of the iron condor.
Okay, that's fair. So you got the 232 by 229. Got it. Now you're adding the buy legs to finish the iron condor.
I'm buying put at 226.
226.
Buying
and then 235.
Yep.
Got it. Okay, so you keep the dollar. That looks, I like that a lot more. 55% probability profit. Is it possible to move this down to stay outside the expected range, move this up outside the expected range? Probability of profit is a little bit better this way. You're risking a little bit more. I get it. So I think Tasty Trade calls this one the chicken condor because it's, I don't know why they call it that, but you just take on a little bit more premium up front versus trying to stay out of the way. And I don't know. I don't like to roll iron condors because it's almost impossible. You're not going to roll it for credit necessarily. But I like the trade, dude. I mean, this is Wednesday, so this would be, you'd have to get through CPI data. Let's take a look at the chop that we've seen on gold, because GLD for the last couple of days, I mean, if anybody has a workspace out there with like Bollinger Bands, there's probably some type of like Bollinger Band squeeze going on right now where it's like it's prime for some type of move. But what I like about Frank's trade is it's also risk defined. So it's, you know, that range is pretty tight. That top is 233. Actually, it's 233.7. And then the low is around 228. So 223, 228, and you have the 232, 229. You're going equidistant from current price. If I was taking the trade, Frank, I would probably accept a little bit less credit and just try to increase the probabilities a smidge, just to do, okay, so my sell strike would be here and my sell strike would be here, and that way price can just stay in the middle. That's my thought.
Well, one thing I'm wondering too is if you wait till tomorrow, I wonder if the IV will be higher because we have CPI the next day.
I doubt it. I bet the IV is going to stay about the same. We can test this tomorrow. 62.8. I'll make a note of this right now. I'm going to make a note. 62.8 on GLD. I don't think it's going to change that much.
229 by 226.
So if you did 229 by 226 on the sell side for the puts, or the put side of the iron condor, and then the 232 by 235 on the call side of the iron condor, you know, a dollar credit's great. You're still risking about $200 to make $100. Probability profit 55%. I just don't love that it's the expected move by the 11th, which is Wednesday. So $2. I mean, actually, I take that back. The true break even. I forgot about one pretty critical thing. If you're collecting $1, your break even's actually 233.07, and your break even is 227.93. So you give yourself that extra. So a break even trade is probably within reason. Like, I don't think you're going to lose on this trade as long as price doesn't do anything wild and crazy.
Yeah.
Fair.
What if we did
in that sense,
this trade for 2 days out?
Okay.
But then we bought an iron condor for next week on GLD. Same legs.
So same legs, but you want to flip it so it's a debit and you're going for like the branch out?
Yeah.
Okay.
Or maybe even go till the end of the month. I don't know.
I mean, that time is fine. Let's see what it's going to cost us. So let me take a screenshot of this one right here. I don't mind this trade. Pretty good there. And then let's flip this into a buy, sell, buy. Oops, not fudge. Buy, sell. You could also, okay. So if we did this, you still have a dead zone. So you're paying $1 now, and your max profit's $200 to lose 100. You do need price to, you know, get outside of your range. Which out to the end of the month, let's see what this is going to cost us if we go out further. So let's take this expiration. Let's go out towards the 30th, which is Monday. Well, the strikes just changed on us, Frank, which isn't great. See how they changed to like the evens? Now they're $5 apart.
Yeah.
We're paying a little bit more for that trade. Let's go out. Let's go one less by expiration. Oops. Okay, so we can go to the September 27th to get 250 spreads. Don't love it. We go to the 23rd, we still get $5 spreads. Well, I think the long iron condor is no bueno because it changes the strikes on us.
Yeah.
It's okay, but it's like a
I agree.
1-to-1 versus having it in your favor like we have in the other one. So
And
if I
it's
could go
gonna-
dollar strikes, I like it more.
It's really gonna have to move out of there, out of that zone in order to
Yeah.
get full credit early on or close to full credit early on.
Agree. But I mean, heck, I don't know what it's time wise. It's like let's play with the time a little bit. Do we think gold by the end of September can be outside of this yellow box? I would say there's a pretty good chance that it is. If there's a chance we could go into October and it's higher or lower, it's like I don't know what it's going to cost us to go out further in time, but let's just find out for a second. Let's go to the monthly expiration for October. Now look at this. October expiration, if we go to the 11th, look at the 18th. We actually have dollar spreads on the 18th. So if we really want to be picky on our trade, let's set it up like you had talked about. So current price is 230. We go to the 229 by 232. We're at 230 right now. Let's go equidistant. So at 230 and a half, something like this. Okay. And then we sell, what do you want to sell against those $3 wings? Something like that?
Yeah.
Okay.
That's good.
Buy, sell, buy, sell. Wow. So this is 75% chance of profit. We're getting $65 for a 230. So we want to go a little bit wider.
So you're paying 3 on a, what is this? A 5?
Well, it'd be a $5 spread, and we'd pay. Yeah, we pay $3.59 for a $5 spread. So the bad part is we go out farther. We're paying for so much time that we can't turn the profit into something favorable.
Yeah, I don't know
Unfortunately.
if I like that actually.
Yeah, I don't love it. I mean, we're almost better off like just doing I mean, if you're gonna set time in it, dude, you're better off just doing like a bear call spread or bull put spread and just pick a direction. That's the hard part. Obviously, a neutral direction is fine, but here, let's try something. So if I did a 231 by 230, let's play this like I do sometimes earnings. Let's give gold a chance to go $10. So 231 to 240, or sorry, 241 here. So $10, and then 239 to 220, $10. Now, I still don't love that trade. I don't think we're going to get that much volatility. Plus, with the higher IV, like you're paying a little bit more for that. I don't know. I think we're spending a lot of time on.
I think opposite of the market. Like I've been saying that I'm selling calls to the upside on the market, and then having a, out of the money puts, longer term VIX calls. For GLD, maybe I'll sell. I could do like a bullish put spread, right? Is that what you call it? Bull put spread, collect money or premium below like 228 or something, and maybe not have any out of the money calls, but instead of selling calls like I would on the market, I would just sell puts on GLD.
I think that's good. I would do like a credit spread, right? So a bull put spread.
Credit spread.
Pick your line in the sand. Put it on income. Did you say something about doing like a bull put spread or credit spread on VIX or VXX?
No, I did earlier, but now I just have a call.
Gotcha. Okay. I am curious on this one. If I did like a near term, let's say, let's see what $50 looks like on VXX. I'm just curious. VXX this week, if I went out 4 days to Friday, $50 put, $49 put. Never mind. 4 cents profit for $46 risk. No thanks. Yeah, it's just backwards. It's just, I mean, right. We could do this. This is the 50-cent spread. Okay, 50-cent spread. Try to get 25 cents, which means price has to fall. We're trading at 13 cents. We'd have to see the VIX fall, which means stock prices go higher. So, I mean, this is kind of my line. It's like we had a nice little chunk up here. We're staying slightly higher on the VIX. I could see elevated VIX as opposed to if the market's on its heels and the markets are going to like lean lower, the VIX is going to try to lean higher. So there could be a defined risk trade right there. I don't know. There's a lot of ways to do it, but I don't know. Do I love it?
Yeah.
I mean, if you did like a 1-to-1 where it's like I'll risk $50 to make $50, take a stab at it, that's not a bad trade. The problem is if it doesn't go anywhere, we might not get filled at the price that we want.
I
So
don't know
think
if
we
I
have a
like
pending
credit
order.
spreads on the VIX.
Well, it's an income play as opposed to, I mean, the VIX it works two ways, right? You can go like crazy volatility event and get paid a ton of money, but that's few and far between. Or you can do like when we're at these lows. I mean, a credit spread is income, man. I mean, it is income. And also,
Yeah.
what happened to a lot of people is they sold the VIX and they sold the VXX and they're selling premium and selling volatility, and they got freaking smoked. So
Yeah.
there's the ways to stab at it, but it's not my favorite.
I guess, I mean, the only way, in my opinion, to trade the VIX is for that spike. So that's why I'm doing this. I wouldn't use this to do a credit spread on. I would use other instruments.
Yeah. Yeah, I like the long stab, dude. I mean, if we get another move to like $30 on the VIX, then your $2.30 call option is going to pay $10, $15, $20 of credit, which is outstanding. So I do like the trade, and there's enough in this like 30-day window or the next month and a half. It's like we'll have volatility. We'll have stuff to keep the market on its toes. So I don't know if I don't know if that's going to generate direction necessarily, but look, if the S&P does something like this, I mean, even if we go, down and then back up, that keeps the VIX still pretty elevated. I mean, I could see the market where, high to low, we start to fade. If we have just, one of those big directional days will keep the VIX somewhat elevated.
Yeah.
So lots of ways to slice it, dude. I don't know. I mean, for me, short term, I've got some income plays. I'm holding into like a 54.10 this week in the SPX. I've got my ES butterfly out to 5400. That's for tomorrow's expiration. See if we revisit the lows from Friday, and then I go into the rest of the week and I'll kind of figure it out. I still need to put in, and I will put these in. I'm going to do a broken wing butterfly either here or here, and probably do it around the 18th expiration and see if I can get filled for $1.50. I think that the highs are obviously going to be a little bit safer, but I might struggle to get that credit that I want. So, but I'll probably do the same thing on SPX up at the highs and NDX. Probably not the all-time highs on NDX, but maybe up to this high right here. So I could do a broken wing up there, and yeah, I mean, this looks a little bit better than downside, if you ask me.
Yeah. I think
so. Anything
credit spreads this week could be a good call.
I think so too. I think if you're looking for income plays, I think credit spreads are good income plays this week for sure.
But yeah, I'm gonna think about taking that GLD trade.
Okay.
For September 11th. But
all right. I'm going to throw in a couple of broken wing butterflies pending, see if they get filled. I did an MNQ trade for a hedge, ES trade for that butterfly spread, CL, that was last week for oil. That's a kind of, I haven't been filled yet, I don't think. Let me see if I've still that pending order on CL. CL. Let's go here. So it's trading at 40 cents right now in the market. I've got a pending order at 50 cents. So I'm trying to do a 65.5 by 64.5. It's $1 wide, $500 risk, $500 reward. Go out to November 15th and just see if oil can stabilize off of this like mid 60 level, and we'll go from there.
Okay.
So
cool.
I'm good there, dude. Looking forward to talking more next week. Any other charts, any other currencies, any requests want to come in? Anything else you want to take a look at, everybody? Saw a lot of gold as usual, indexes as usual. Yeah. I want to comment on something. I didn't get a chance to talk to Nick about it. So Nick took a short on the Nikkei. So what did you guys discuss?
Not much. He kind of just did that on his own.
Okay.
I'm not against it. I kind of like that idea.
Yeah.
The risk is if you're wrong, I think Nikkei is it's going to move harsher than the other indices, but
I agree.
They're still buying up the yen. COT still buying up the yen. Kind of, they haven't really touched Nikkei. UJ is just looking grim.
Mm-hmm.
I see weakness in the stock market, and that carries over to the Japanese stock market, and I see strength in the yen. As long as they keep buying, I think I'm gonna stay bearish of the indices once we
Okay.
see as long as we see the unwinding of the carry trade,
Right.
which has happened, but now it's against some major support, not really moving today. I don't know. I think this is Nick's small hedge. So
Okay.
he's got a
Against
small
just
position
against
on
the U.S.
Nikkei.
market,
Yeah.
just in general. Yeah.
On his account, I think he's long a lot of stuff, or I could be wrong.
Okay.
I think using this is kind of like his hedge.
Okay. I am going to set a chart alarm here. This is EWJ, which is one of those like, it's an ETF. This actually excludes the bottom 15% of the Japanese market. So you take your, Nikkei 225, take out the bottom 15%. So I mean, not that that's like the cream of the crop, but it's I take the top 85% versus the bottom 15%. But this is an ETF that's way cheaper than trading the index. As a U.S. trader, I can't just buy and sell the Nikkei outright, or I typically don't. So I'm looking at something like this to say I kind of like the idea of one thing we haven't touched on, because the Bank of Japan monetary policy is kind of a crazy situation. There might be this scenario where what just happened to the US after raising rates? The US went from a crazy hike cycle, and did the market crash?
You're talking about in 2022?
2022 to now, as we were raising rates, did the market crash?
I mean, it was a bear market.
2022 was, but what happened afterwards?
It was an extreme bull market.
Yeah. So as the Bank of Japan is likely not reverting back to negative interest rate policies, I mean, I think there's clearly a shakeout that has to happen in the Nikkei, but I wouldn't be surprised if this is part of the potential shift into like non-US growth. The US has had it's been king of the hill for a long time, and I'm not like short US. I'm just saying, like, if you're looking for growth elsewhere, growth in asymmetry and open trading, like open space trading, to me is not in the US. I think think about it this way. If the market has been going up, and this is what the US has looked like since, I mean, you go to the bottom in 2020, the rip in 2020, 2021, 2022 was a decent bear market, 2022 and 2023, 23 and 24, this is where we're at right now. This has been a pretty darn good run on top of the, crazy run we saw for the last decade plus. I don't think anybody in the US, and just think about how frustrated investors will get if the US market doesn't return, 10% a year, 15% a year, 20% a year next year and the year after. If anything, there's way more risk. And I mean, tell me if you disagree, but I think there's way more risk to the downside in the US than there is to the upside. I think the risk opportunity, or the reward opportunity, the upside seems a little bit less than the potential risk to the downside at these crazy valuations. Not saying that we can't go higher and melt up higher. Not saying that a debt spiral and a debt cycle couldn't all of a sudden be this blow off capitulation move, and then we have a nasty recession crash later. But something about the Bank of Japan being in a position where they're no longer cutting rates, they're actually considering raising rates. And I don't know if they will raise rates more, but from 0.25, if they get to 0.5%, if they get to 1%, I do wonder if that has positive traction for their markets overall. I don't know. I'm just throwing it out there. Maybe it's playing devil's advocate or being contrarian, but if the EWJ were to drop down to this low we saw back in August, it'd be the same thing as, I'm just going to take it based on historical significance. Anytime we've seen a 10, 15, 20% correction in pretty much any market, there's usually higher highs coming, or gains coming in the next 12 months. So if the Nikkei were to come back down to these lows again, would you continue to be wanting to sell it? Would Nick be continuing to want to sell it? or would this be high, low, 27%, and that's a 27% discount if you believe that Japan has the ability to go higher? Thoughts?
I don't know.
Okay.
I think I'd like to see it go back to the low.
I would too. But for me, if it goes back to the lows, that's a 27% discount. I am going to buy that for the precedence of 12 months out. It's usually higher by a lot. So I think for me, I'm doing, option trades in here. I'm long the Nikkei, and but probably with defined risk. I think it's silly to be like, I'm just long because if this thing goes into a 1989 top and all of a sudden it takes 30 years to get back to it, that's obviously a terrible choice. So I would do risk defined trades, and if I traded this with EWJ, I could scale into that because it's an inexpensive ETF at $70, or I could just trade options around it and trade credit spreads, stuff like that. So food for thought. Well, we can let that marinate until we chat again tomorrow.
If the VIX goes back up to 60, I'm sure Nikkei is going to be probably at the lows or lower.
I agree.
So if
By
that's
the way,
where I think, this is where I think the market is headed. That's why I'm long the VIX.
Yeah.
So
I want to throw this out there. I heard over the weekend, this was a bunch of podcasts and crap that I listened to when I'm at the gym. This was a mispriced VIX. That I don't know how it all plays out, but this truly, if you look at the VXX, which is the futures derivative of the VIX, this was probably the more accurate rip to the upside. From 45 to 90, that was a 100% gain in the VIX. Or volatility, so 100% gain as opposed to the 300+% we saw on the VIX. So I'm saying for you, if you're long the VIX, that any move back into the 30s, if it was my trade, Frank, I would just be moving stop losses if you can, because I don't know. I mean, this wasn't tradable. This whole spike was not tradable until it was back into the 30s. So if we get into the 30s, move a stop loss and see if it wants to rip and go nuts. But that's all. I don't know. I think this was potentially a Volmageddon mispricing, like fat finger weekend, no volatility, no liquidity. It's there, and we'll remember it for that. But I don't know if this is truly what the VIX actually did. So I could look more into that, but that I just heard that in a podcast with some macro guys. I'm like, that makes sense because the VXX didn't do the same thing. It was only up 100%, and this thing was up, 300%. So true volatility might be a little bit overstated on the VIX. That's all.
Okay, that's good to know.
Okay.
It did seem kind of out of nowhere.
It was. I mean,
for what the market did.
Yeah, if nobody for anybody that was not affected by this, freaking, I'm so happy for you because any look, a lot of traders out there, like there's income plays like crazy, like cash secured puts. I'll own them. I'll own the SPY. I'll own the stock. I'll own the stock. All those puts out there were just getting absolutely demolished. Even if you're way out of the money, like so far out of the money that it's like, yeah, I took $1 on this trade and I'm, it's a 5 delta, which is a 95% chance of profit. The market didn't crash enough to test that 5 delta trade, but the bid, the ask was so wide during that volatility event that it could have blown through your stop losses if you had any stop losses. So traders would have woken, come to the markets on Monday morning, the 5th, and seen, a P&L that could have been 50 to 100+% in the red because they just, their exposure was crazy high. Before we go really quickly, this is another thing we need to watch.
Junk bonds,
high yield bonds, dude. This credit spread tightening is another reason that if we're going to see the market unraveling and we're going into like bear market recession, things are getting really wild and crazy out there. Just go back to most recent 2022. Okay. This was the deleveraging in late 2021 into 2022. You can see that this JNK symbol did make an aggressive breakout lower. And we're doing the same thing now. So this is here and sideways. I'm just going to keep an eye on this one because if this stays pretty tight, no worries. Market's just doing what it does. But if this starts to make a breakdown, if we get below 94, I'm going to set a chart alarm right now at it. If you get below 94, we could be in for a little bit more problems. Like things are going to widen. Things get a little bit tougher to trade. Risk off tone would certainly be kind of taking hold of the market. So just one thing we need to keep kind of calling back to. And, I will keep trying to do my best to remind myself to just take a look at this as one of my, many kind of leading indicators of like, okay, this is a good way to keep an eye on how risky things could get out there with like, and when this drops, the liquidity is also wider. Like the bid ask prices are way wider. The fills are tougher to get. IV is high, which is great for selling options. But if you're selling options in an illiquid market, not illiquid, but like less liquid market, it's not as easy. So just throw it out there. Like we can't forget about this, but this is also a good indication that if it stays tight, this bear market focus and this bear market shift and everything's going to fall the hell in a handbasket. It's not true. Like we have to see this historically is a thing that starts to get really nasty really quickly when things are looking worse out there. So keep this in mind.
Okay. Good to know.
Cool. So, all right, man. Well, it was fun to rock and roll for a long session with you today because I know we didn't have a second guest. But if we have like Nick or James, anybody else coming on at 11, you and I will do our best to tighten things up at that 11 o'clock handle, which is almost impossible unless we jump in and it's like we start talking and then what feels like 5 minutes has become an hour segment.
So, no, we covered a lot today.
Yeah,
I feel good about what we talked about.
That's why I'm here, Frank. Make you feel good, dude.
But now that we have those ideas going, I'm thinking of doing some more selling, some more option selling.
I like it.
And I'll let you know what I do. But
okay.
I'm going to get off now. All
right. Sounds good. Well, thanks for being with us, everybody. As Nick mentioned earlier in the show, and I mean, everything's rolling out with the signal service and what for the A1 trading community. So if you're already a part of that, if you're interested in what I do and I add to it, same thing with Frank and Nick, Elvin as well. I mean, all that's available for following the trades. And we will continue to touch base on those and talk through them. You catch some in the live session. But as we close the sessions up, believe me, it's like, okay, I'm going in and I'm hunting. I'm going to search for some trades. So cool. Thanks, everybody. Thanks, Frank.
Yep.
See you
Thank
tomorrow.
you. See you soon.
Thanks for tuning.
Got a promo?
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.